Given our recent dip, I feel now is the perfect time to display one of my favorite trading techniques during the trending phases of these cycles, with us currently being in the uptrend phase. Throughout the bear I suggested quite a few times to learn how to trade because ironing out your skills in that nasty chop would have made you a master during these easy times. But even if you didn't do that, it's fine, because with what I'm about to show you this video, and most importantly the examples to go along with it, you should still end up quite the trader by the end. It's quite simple too, I'd say. As always, conviction and patience is needed, but if you can pair this up with your other techniques, whether that be moving averages or different RSIs, you should develop quite the system by the end. But that's enough teasing, let's now get into it. So like I said, during a bullish uptrend like Bitcoin and many of your altcoins are in right now, you'll constantly be getting one of two things: consecutive green candles up and sharp pullbacks. We've just recently seen the first iteration of that bullish uptrend and then a hard drawdown. The idea of this video will be showing you where exactly to bid before that pullback ends and we resume into the next series of green candles. The technique we'll be using has to do with something called hold levels. This may ring a bell as we talked about the significance of hold levels in our exit strategy video a few weeks ago. If you haven't seen that, go check it out after this one. And it's also worth noting that you should be subscribed, because if not, those who are will continue to receive this information. This time we'll be using hold levels on shorter time frames like the daily. It's one of the most perfect ways to swing trade during this part of the cycle. I'm already accumulating pretty outrageous gains with my small trading bag, and trust me, if I can do it, you can too. With hold levels in an uptrend, we want to mark out the distribution candles yet to be tested, where distribution candles are the red sell-off candles. Let's take the Solana chart, our golden boy play of this cycle. We'll start with the very bottom of Sol at $8. Oh, and just ignore this video here, my first one ever starting this content creation journey, screaming to buy Sol. But anyways, this doji candle, I want you to mark out the top of the wick and the close of the body as such. That's it, those are quite literally your hold levels, where in general the idea is if price gets there you'd want to bid hard, especially in once again a bullish uptrend. Now price never did end up getting there again, but nonetheless that's the approach. We'll now continue applying this to every Sol hold level going up to our current $200 valuation and see the results. As again with this it didn't fail, it's just that we never got there again, which is why I highlight the importance of patience. If you're on the ball you probably noticed the next hold levels to mark out. That'd be on this daily candle at $13. So again let's mark out the wick and body. Same game plan, if price gets there we buy. And while we're at it, there's another candle we got to mark hold levels out on, being this one up here at $16. So same thing, mark out the wick and body. Throughout this video I will be giving you small tips and tricks and pieces of knowledge. For instance, these candles are my absolute favorite to mark hold levels on because of how clean it is. A red candle getting consumed by big green candles, I find these serve the best as hold levels. Let's see what transpires after. So Solana continues to trend up and get into this accumulation until it breaks down and finds support on those hold levels we marked. A perfect test and bounce of 50%. But eventually Sol didn't continue its move higher. It ranged for a while before coming down again. But this time it practically found no support at those previous hold levels. It kind of just sliced right through as if it wasn't there. That's because with these levels, once they've been tested, that's it. The gap there has been filled and it's no longer tangible. Instead, Sol continues what was quite the sell-off that day, but then again bounced hard from what was that other hold level we had down here on this candle, as this one had not been tested yet. It again bounces and never got to those levels again even till this day. So if that was your entry into Sol, that'd be a phenomenal trade. Remember how I said these hold levels are my favorite? Well, why is that? You may have noticed in this chop there were abundant hold levels to mark, but it's quite messy. I don't really like getting involved during these times. For instance, look at this hold level here. It got tested, worked fine, but because Sol was messy and not showing strength, it wasn't worth the trade. Same thing with this candle. Perfect test of the wick. You would have made 40% to be fair, but it's quite bunched up together, having likely inflicted a bunch of anxiety. All the hold levels within this zone worked perfectly, but I don't like scalping during these times. I like these lone hold levels which conveniently come around quite often during bull runs. This now brings me to this hold level here, which never ended up getting tested, except you see it kind of did. This is why I highlight the importance of sticking around, because I'm going to keep throwing throwing these little tidbits at you. The next concept you need to understand is the idea of this peak and valley, a type of candle pattern you'll see quite often before a bullish leg up. You see the peaks of these valleys also carry quite the significance, to the point where they too must be marked off. So with this valley we mark the peak being this wick here, and the close of its body, which if we do that you can see price action did in fact find support there before bouncing aggressively up. Solana then goes on its raging trend upward where a lot of hold levels get left in the dust and never get the opportunity to serve as support. The next blatant one that comes about is at around $74 this valley here. The hold level never got tested but the peak of the valley did. Here at 110 we have a great example. Remember what I said about those lone red candles, my absolute favorite to trade. It's no coincidence that the wick stopped there before finding support. Patience is the name of the game, but the beauty here is it's not just SOL you're looking at but every single chart in crypto. So opportunities from at least my experience do almost sort of come across every day. We just had a meltdown across the board, so let's see if the hold levels of your favorite crypto held up. So WIF for example absolutely did, where this hold level supported this wick before a strong bounce, and as did this hold level on this 60% bounce. But this scenario allows me to address a very important question some of you may be asking. It's easy to say now that if you just bought WIF on the close of the body you'd have a 60% spot trade win in just a day. But as we also highlighted earlier that valleys are important to consider. So what if price action didn't get down to the body and instead found support on the wick of the valley, resulting in half the win at 35%? That is something you're going to have to figure out yourself. My personal approach is to ask this question: would I rather choose to enter on this valley where the pro is I guarantee an entry, or would I rather wait for these levels down here that allows me to get a big win, and on top of that it's better for risk management where you have your stop loss under the candle for example? It's a case by case thing, but that's the dilemma you'll always be having on your mind. Look at opsec. Recall the huge sell-off due to the mass FUD attack a couple days ago. It found support on that blatant hold level before a 200% bounce up. Look at polkadot, strong uptrend, a huge sell-off, but then finds support on that standout hold level before a 40% move upward. Here's injective, so this hold level down here worked tremendously, as did this one over here, but then this over here seems to have failed. I wouldn't say it failed because price action did find support and print a green candle that day after, but overall with the heaviness involved and markets not playing nice, it rolled over and continued down the next day. This I'd say is the biggest risk of using this trading method, that the force in the bounce isn't the strongest and barely works. So contrary to what you think, the biggest risk isn't this not working. Yes, there have been times where price slices right through without acknowledging the hold levels, but it's quite rare. In other words, if you can get very good at identifying price action not playing nice and looking heavy, and being able to cut positions when it's about to turn over, you can be extremely profitable with this method, and honestly that just comes with practice throughout time. Let's now transition into some current setups of these hold levels. So with Fetch AI here, as you can see extremely obvious hold levels in the middle, we'll go ahead and mark out all peaks and valleys and wicks involved. Next we determine where we'd like to bid, because remember any one of these can serve as the ultimate support level before a presumed bounce up. For me, I'll front run the body and place the entry at 1.821. I'll put the stop loss just under this wick here, which would mean a 10% loss, which is quite a bit. But the take profit level is something we might not even have to pick. Fetch is an extremely strong coin in the biggest narratives. If this bounce works out, it could quite literally be the cheapest you can bid Fetch before its ultimate bull market top, if that makes sense. So for example with seedify.fund, I've been holding the trade since my entry here and will continue to do so until I think the top is near. Remember, these trade positions are different from my spot positions, so that's just how I'm approaching the trade. But once you've made whatever return you want and want to take profits to continue trading, go right ahead. Algorand still holding a trade from here, say network still holding from here, you get the idea. Other setups are something like rndr and these hold levels here, Kaspa and these levels down here. BNB seems to be hitting a very critical hold level as we speak, and so is arweave, so I'm very interested to see what transpires with those. But overall you should get the idea. The biggest thing you can do now is practice. Don't go putting up all your savings, but responsibly get your hands dirty and try applying this stuff yourself. Because I promise you, if you're not a good intraday swing trader like myself, this is one of the most perfect first stepping stones you can take to get a good start. If you're not subscribed again at this point, I really don't know what to say. And for your trading needs, sign up to an exchange link below for cheap fees and big bonuses. And I'll see you all in the next one.